Hello, Maverick traders. This is Rob Reinhold. It is March 11th, and we got a lot of stuff going on in this crazy market, so let's get into it. In this session, we're going to go over the news of the day. We're going to take a look at all the broad markets. We're going to take a look at some sectors, and then we're going to have some setups. Now, I just want to warn you, I'm going to go light on the setups here, and I'll tell you why when we get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
More volatility in the markets and another down day as well. We had the Dow down 1.14%. We had the S&P down 0.76 and the Qs down 0.18. I want everyone to understand that all of these markets were at one point, the S&P was down like 1.5%, the Qs were down over 2%, the Russell was down 1%. At one point, they all went positive, and if it wasn't for the last 15 minutes of the day, there was a nasty little sell-off right at the end. These would have closed positive, so we did get some buying off the bottom. We saw buying in oil. We saw buying in gold. I'm going to start pointing out that I'm seeing some bottoming activity. And I'm going to go through a couple of other asset categories, and we're going to talk about this bottoming activity because I want to make sure everyone understands where we are in the market cycle here. The news this morning, we got the JOLTS job report. It was a little bit better than expected, but basically as expected. Pretty much flat by the month. This is something the Fed is looking at. Here's the problem. This is January's number. So no one cares about January. Just go ahead and forget about it. The big news of the day is we had President Trump came out and said, well, in retaliation of the Ontario tariffs put on energy, he's going to raise steel tariffs on Canada from 25% to 50%. The market dropped on that news, and then Peter Navarro, the White House trade representative, came out and said, no. We're not going to do that. And then Trump came out later and said, okay, we're not going to do it. Okay. Again, this is not a political statement. I know politics is a very big deal right now, and I'm not getting into politics. As I've said over the last week or two, this kind of behavior is worse than the actual tariffs itself. Just put the tariffs in place. Hey, Canada is 25%. I think they're stupid, but put them in 25%. Let Canadian businesses figure out what they need to do to still make a profit. Maybe they got to raise price a little bit, maybe cut costs a little bit. But if they know, then they can actually move forward. Right now, with tariffs being put on, taken off on a day-to-day basis, everything's frozen. And it's worse. When everyone's frozen, says we can't make any decisions yet, we can't make any expansion plans yet because we don't know the tariff situation, it causes a massive slowdown in the economy. And that's exactly why we're seeing all this selling. So let's take a look at some of the market internals here. The advanced decline line recovered to about 40% up, 60% down. And I want to take a look at this 50 moving average. This, I don't have any data to back this up. This is all just anecdotal evidence from me over the years. Whenever it gets above 70%, I start to think, okay, we're getting in the area of a bottom. When it gets closer to 80%, I'm really looking for a bottom. I'm saying, okay, we are extremely overbought or extremely oversold. So again, if this was in a bull market, when we would get up to 78, 79% above the 50 MA, I'm thinking, hey, you know what? Pullbacks are likely. So this is one of the things I'm looking at that says, hey, pullbacks or rallies are actually a little bit more likely here as the market gets overly pessimistic. And if we take a look at the charts, we can see that, again, I'm going to go from high to low for all these charts. Down, rally, down, rally, down, rally. So all we're getting is rallies. That's all we're getting is bear rallies. At this point, there's nothing in this chart that's telling us that this is any sort of meaningful bottom. Now, what I would have liked to see, and like I said, I am actually coming out and saying, I think we're really close to a 2, 3, 4 day bottom to where we actually bounce. And I've been very, very clear that I am waiting for a break, which happened, a rebound, and a fail. That's what I'm waiting for to get really bearish. We've had the plunge. I think we're very close to getting a rebound and then a failure. That's what I'm looking for. So I'm really scouring, say, okay, what are some things telling me that we might be closer to the bottom? Take a look at these three charts. The first one is Coinbase, and also we'll take a look at cryptocurrency too. So Coinbase bounced, Bitcoin bounced. These are risk-on assets. We also have stocks like Tesla that's been absolutely horrible. It bounced today. It actually had a positive day. Big high flyers like Palantir, they bounce. So we have these kind of things that are showing, okay, we are looking to bounce. Take a look in the Forex market. The yen and the Swiss franc have been going up and up and up lately because of a risk-off move. And the Aussie and the Kiwi have been falling. Today, look at this. We had the Aussie Kiwi up and the Swiss franc and the yen down. Oil has been falling during this time. And we actually saw a bounce in oil. Now look, I'm not saying it's guaranteed to have a bounce here because I don't know. Nobody knows. All I'm saying is I'm starting to see more and more pieces that you would see when you would get a little short-term relief bounce. How long that bounce lasts in time and movement, I have no idea. But I do not think that right here, right now, is a great entry point for more bearish positions. I just don't think it is. I don't think it's a great entry point for long positions unless it is long where they're going to be short-term in nature, 1, 2, 3 days tops. Because I think going past that is asking a little bit too much. We are still in a very big bear market with very terrible economic news coming down the pipe. Not typically where you bottom. All right, here's the Qs, same thing. I'm looking for a bounce and then a fail. We got more of a doji here. I would have loved to see a little bit more volume. Big volume would tell me, hey, we've got a capitulation bottom. We don't have a capitulation bottom yet, but I don't think we're there in the market cycle yet. Typically, a capitulation bottom comes at the low. This is, in my opinion, a low, not the bottom. So I'm not really looking for a capitulation low here. I think we get a little bit of rally, and then I think we come down. What rally today? You can see there's really no clear things. There are some stocks up, some stocks down. No real clear pattern of where the strength and weakness is. This has been a pretty even fall across the board. So look, we're at a -2, but like I said, I think we're going to get a little rally. I think you're going to get a better opportunity to enter in some short positions in a couple of days. Now, during this period of time where we get high volatility and we get crazy movements, one of the things I like to do is switch over to ETFs. So ETFs are typically lower volatility. And what I mean by that is that instead of going after like Palantir, PLTR, which is a crazy stock, it goes up and down, you want to mute your action. And yes, we can mute that action through some option strategies. But another way we can mute them is by going to ETFs. ETFs, by their nature, are comprised of hundreds and hundreds of different stocks, or whatever it is. So you're not getting that single stock exposure. You're now just playing a theme. So all of these are ETFs here that I've listed. And if you take a look, we've got EWW, which is Mexico. We have China. We've got Brazil, and we have Europe. Surprisingly, all of these ETFs are doing much better than the US market. Now look, I'm going to get into not conspiracy, but opinion. I'm going to get into opinion here. If you take a look, the international markets have been doing much better than the US markets. After years and years of the US markets vastly outperforming. I think what's happening is people are looking at America and saying, hey, it's not as friendly anymore to do business in America. And countries like Canada are more likely to do business with other countries than the US going forward. And so what we're seeing is we're seeing places like Europe just hit all-time highs. We just hit all-time highs 3 candles ago in Europe. So this is the VGK, and you can see we're just having a pullback here. Look at those long lower shadows, and it's happening right at a support point. This chart looks beautiful. This chart looks beautiful. And look, if the US markets bounce, I see this being bullish for the European markets. I like this chart quite a bit. So look, it's an ETF. It doesn't move a lot. I don't think it's going to go make new all-time highs anytime soon. It's 73. But look, we can easily play like a 71-72 bull call spread. Right now, you're probably going to pay 45 cents. You've got 55 cents of max gain. I like that trade as just a really simple, long trade. You're not asking it to do too much. You're just asking it to just bounce a little bit. So this is a long here that I like on the VGK, the Europe ETF. On the short side, let's take a look at the home builders. This chart looks horrible. We just had a big rally, and today we did not put in a good candle today, especially compared to the rest of the market. We saw the Nasdaq had a doji. The S&P almost closed positive, except for the last 15 minutes. This thing looks atrocious and looks like it's going lower. We take a look at the trend line. We can say, okay, this thing likely works its way down to 93. Look, I'm definitely not going to be that aggressive, but could we use 97? Absolutely. So again, 97, 99. Bear call spread, bear put spread, or bear call spread, either one. Or you could even be less bearish and do like the 98 and 99. Or you could even be all theta and do the 99, 100, where it just has to stay below 99 by your expiration point. I like to go to ETFs this way. It tampons down the volatility and allows you just to play themes. Hey, you know what? Instead of going in and shorting, DR Horton or KB Homes or anything like that, let me just do the whole basket. And it mutes everything down. So I highly recommend take a look at some ETF trading if you're looking to add new positions in this high volatility. Like I said, it mutes everything down and makes it a little bit more calm. And now you're just playing very broad themes instead of individual stocks. So the market outlook, I think we're seeing some bottoming action. I don't think it's the bottom. I just think it is a bottom. So those last for a couple of days. And then, like I said, I think we're going to get better opportunities to enter in more bearish positions. We do have the CPI report tomorrow. Now, this report has the ability to be a real catalyst. They're expecting 0.3% on both the core and the headline number. If the numbers come out better than this, we could easily see a 2, 3, maybe even 4% market rally tomorrow. So again, we're heavily on the downside. Any sort of good news can spark these big market rallies. If we get, as expected, 0.3 and 0.3, then I think the markets, this is a catalyst for it to give a little sigh of relief. And we probably get that 2 to 3 day rally that I was talking about before it fizzles out again. If we get worse than 0.3, we're headed lower. And all this bottoming action that I've been talking about probably won't happen until there's been some more downside. So tomorrow's CPI report, very important. Tomorrow's candle, very important. If you say, hey, I want to wait for tomorrow's candle before I do anything, I think that's a great idea. I think it's a great idea. See, did we get a bounce off the bottom of that CPI? If we do, I think we have a couple days up for any long positions that are working, or again, if you want to take some short-term longs to balance out your portfolio, great, but don't expect it to last more than a couple days. All right, that's it. Thanks for joining me for the Market Roundup. Goodbye, everyone.